Dear viewers, today I will be talking about gold investing and all the relevant knowledge of it in local context. As you know, the gold is a comparatively dense and shiny yellow metal and is at a high melting point. It's used as a tool for investing, as a metal. It's a tool for investing as it's a metal that does not corrode or cannot degrade and last forever. So actually, because of its stability, gold investing is now considered a safe haven against good and bad times. Moreover, when compared with currencies trading, gold price cannot be manipulated nor abused by the government. In fact, a gold standard makes currencies stable. So now I will show you the price of gold in the past 40 years. In 1973, the price of gold increased from $35.08 to $42.22. When the US dollar was tied to international currencies rather than gold, it rose to $122 US. A year later, Americans were permitted to own gold and price skyrocketed to $180. Mining stocks thus beat the average market stocks. However, during the 1980s to 1999 period, prices of precious metals slumped. However, in the next decade, price hit a record high again, ending off the decade at $1,150. A financial crisis in 2008 caused gold prices to soar again. Countries like China knew the world oil supply would end eventually, and there was a tendency for gold prices to increase. Because the currencies bought a lot of gold, causing the prices to rise. Even countries like India were also involved in buying a lot of gold to keep. And now, we will move on to the advantage. So now, we will look at the advantages of investing in gold. As we mentioned before, it is a safe haven. Since the dollar is supported by gold, it has strength and people have confidence in it. It also has the same value in good time or bad time, counteracting the effects of inflation. So now, we will move on to the disadvantages. Gold investing does not have interest as compared to keeping money in fixed deposit. Therefore, it does not guarantee a 100% return. Also, the prices are subjected to inflation. This is because the price is subjected to price and demand. When trading gold futures or spot gold, they face higher risk and must sell at a loss when prices move against them. But that's it. Compared to the advantages we mentioned earlier, which sounds limited, gold could be a good investing tool. So I'll now move on to how to invest in gold, as there are many methods of actually investing in gold. So let's start with gold futures. Gold futures are firm commitment to make or take delivery of a specified quantity and quality of gold on a prescribed date and on an agreed price. Gold futures contracts are traded on various exchanges such as the Commodities Exchange in New York. The prices of gold futures are published by the exchange and are therefore transparent. And the size of the market also provides liquidity and competitive bid-ask spreads. Second would be the investing in spot gold. Spot gold is traded in an over-the-counter market, but bid-offer quotation will vary between different dealers. That said, the differences in offered rates are usually not large. Unlike gold futures, which have expiration dates on their contracts and positions that can be rolled over, you can hold your positions for longer periods when buying spot gold. Gold futures and spot gold are also known as paper gold. What about gold exchange ETFs? A gold ETF aims to track the movement of underlying gold prices less expenses. Each shares of the ETF represents a specific amount of gold. As more investors invest in the ETF, the bullion holdings in the ETF is increased accordingly. As each shares in the ETF can represent as little as 1/10 of an ounce of gold, it is suitable for those who have limited capital. Finally, we have the classic bullions and coins. Modern gold coins allow investors to own investment-grade golds between 0.90 and 0.9999 finance. That is a legal tender. There is no risk of default when one is holding the gold object, as the appreciation in the value of certain collectors' coins and bars may be greater than the underlying gold price. So other ways include buying gold jewelry at low prices and selling them at high prices, but the returns are not high. That's also not a good idea, since the craftsmanship of gold also has charges. They will charge you when you buy. So in conclusion, investing in gold is a very good way, since it's a very attractive option that allows investors to invest in gold in many different ways. However, one should have the proper knowledge and skills in order to invest in gold properly. Thank you.